tuning into Talking Point. I'm your host, Neeraj Shah. A lot is being spoken about how specialty chemical companies will go through the next 6 to 12 odd months, considering that end user industries are experiencing volatility of just a very different magnitude. Fairly recently, we had the BASF global CEO speak about how demand will likely taper off in the second half. We've had a bunch of other agrochemical companies or agrochemical end user companies talking about how there is a bit of a issue with regards to demand outlook. At the same time, for a company like Vinati Organics, who's our guest today, oil and gas is looking as strong as it has probably never looked like in the last at least a decade, if not longer. So it's great to get in Vinati Saraf Mutreja of Vinati Organics to talk about how does excuse me for that, she see the outlook going ahead. Vinati, great having you. Thanks for joining in. Hope all is well.
Yeah, all's good. Thanks for having me here, Neeraj.
The pleasure is ours. So, Vinati, can I start off with oil and gas? A bunch of people saying that this is probably oil's decade. Oil is the new data. What's your experience been with the end user industry?
See, just one of our products, which happens to be our largest product, ATBS, does find application in oil drilling. And as of now, we are seeing very good demand in that segment. Even our customers are indicating they see this segment growing in the next 3 to 4 years. So that's precisely why we have announced a new capex, and we will be expanding our capacity by 50% because we are almost at full capacity as of today.
Okay. I reckon when you spoke at the end of Q4, you mentioned that the demand was looking strong, but you didn't foresee any need to take price hikes. In that, the demand may be strong, but unless raw material prices go up, you will not do the price hikes. What's the current scenario? Because you're a bit unclear about what's the raw material scenario right now.
No, the scenario stays the same. See, we are very clear. We have long-term contracts with most of our customers. It's a formula-based pricing mechanism. So only when the raw material price fluctuates does our end product price fluctuate. We maintain our margin in dollars per kg. So price, in fact, the acrylonitrile price, which is used in the ATBS, that price is coming down. So we may see some softening there, but the other raw material MTBE price is going up. That's directly linked to oil. And so again, ATBS price is going to remain more or less the same, I think, in the coming quarter at least.
Okay, fair call. No, I was also trying to wonder if has there been, as is the case with a bunch of other commodities and input costs, wherein there's been a bit of a cool off from the recent record highs in a lot of cases. For you, has there been a bit of a cool off in any of the raw materials, which might give a bit of a tailwind to margins? And if not in Q1, then in Q2?
See, like I mentioned, for example, ACN has come down, but then the other raw material MTBE has gone up. So net, I don't see the pricing scenario changing much, at least in this quarter. But let's see after 3 months from now.
Okay. No, I also meant the console business because I believe aside of ATBS products, have you seen any major fluctuations? Has there been a bit of cool off?
Absolutely. The raw material prices just peaked off suddenly in March, April, and May, June, we sort of saw it stabilizing. June, maybe a slight dip. But again, it doesn't matter to us because it's so volatile, and thankfully we are able to pass that on, maybe with a 1 month lag or a quarterly lag. So that's really not the focus for us. The focus for us is more how the demand is doing for our existing products, where we can expand, where we can get into new products, how to increase our product basket size. That is what the focus is for our company, really.
Okay. So you're effectively telling me, Vinati, that margins and what happens there in a quarter or two is a bit of a non-issue because largely being passed through benefits or losses.
Yeah, exactly.
Okay, I'll keep in mind. What about the agrochem space? Because while that was looking strong, recent reports by a bunch of brokers suggest that there has been a bit of a cool off and quite material in certain cases. What is your experience? Because I presume agrochem is also a big end user industry for you.
Not really very big. Just one of our product, isobutylene, is used in a pesticide, and there we are frankly not seeing much difference. Again, it's a small use. Most of the IB we produced is used for a captive consumption in ATBS as well as a butyl phenols. In fact, we will be expanding our IB capacity as well to keep up with our own demand, our own consumption.
Okay. Has there been a case, Vinati, wherein the demand for the products have been strong, but because of the supply chain issues, availability of containers, etc., there could have been a bit of a mismatch or a loss of business because of that?
I wouldn't say loss of business necessarily because of raw material unavailability. Most of our raw materials are bulk chemicals, and they're easily available locally or imported in bulk. But definitely, the since we are an export oriented company, 75% of our revenues come from exports. Now, the time to for the product to reach end to end has increased significantly, and that reflects, say, for example, in our debtors outstanding as well, because customers tend to make the payment only once they receive the product. The bookings get delayed, shipments, vessels get missed, so that time frame of 6 to 8 weeks has increased from 8 weeks to on average about 10 to 12 weeks.
Okay. And I presume that's largely on account of what's happening in China, or is the Russia-Ukraine conflict also adding to the...
I think this has been the case for the last year or so. So I think it's mostly because of China. I do believe, at least the freight costs have stabilized. Some have come down also. Like, for example, the freight from Mumbai to New York, and I do see that coming down in the next few months, and mostly because of China opening up and China easing on its restrictions.
That's great news. Okay, now before I come to just a couple of impact questions of the added capacities and the mergers in FY24, how do you expect FY23 to be? Would it be a soft year? Would it be unpredictable at best? Or are you able to kind of foresee what you will do in FY23?
I have earlier also given a guidance, and we maintain that we expect a 20%, 25% growth in FY23. I mean, if you look at our Q4 was quite strong in FY22, and we expect to maintain that run rate. So that would effectively mean, 20% growth at least in EBITDA as well as revenues.
Okay, and therefore I'm asking you to forecast a bit more. I know 12 months is a really long time in the current circumstances, but your viral additives amalgamation benefits probably come in FY24. I think the ATBS expanded capacity hits sometime in FY24. Is that a bump up year for you, a step up year for Vinati per se, or not quite necessarily?
No, it'll be the same. 20% growth, 20-25% growth year on year. Because even if say the VAPL merger comes through, which hopefully it should by FY 2024, still that plant we will be running at best 60% capacity. Maybe 50% capacity. Also, the butyl phenols that we are now selling outside will be using captively. So to manufacture those AOs. Now, the ATBS really will come at the fag end of FY24. So I would still maintain 20-25% growth even in FY24 over 23.
Last question, Vinati. In a manner of speaking, correct me if I'm wrong, but you kind of setting your company up for a near 20%, 25% growth, as the case may be, a few percentage points here and there, for the next 3 years at least, if not longer.
Yeah, that's absolutely right. We see ourselves growing 20% year on year for the next 3 to 4 years.
Great.
Given our expansions and the new product lines that we are getting into.
Okay, great. Vinati, thank you so much for joining in today, and all the best for the quarters ahead.
Thank you. My pleasure.
And viewers, thanks for tuning in.